Good, good afternoon, sir. Sorry, good morning, sir.
Good morning, Sparsh. Good morning, everyone. I was just
Good morning, sir.
preparing. Good morning. Good morning. I was just preparing the
Morning, sir.
notes. Good morning. Good morning. Yes.
Sir,
Yes. Tell me. Yes.
sir, if you don't mind, I had a question about accounting
Please ask.
equation.
Ask
Sir,
me.
it's just a normal question, sir. Like we start with vouchers, then we move to journal, then we go to ledger, then you do some basic trial balance and final accounts.
So
Sir, what
accounting
is the
equation. Accounting equation. So there are two approaches to deal with this, right? If you're a commerce student, then sometimes they do not even look at the accounting equation. What they do is that they
exactly?
have. Right. So accounting equation is another way to understand how the transactions are affecting each and every account, right? So that's another angle. Why we use this approach in management schools? The idea is that because it gives better perspective about how what is the impact of every transaction on the account as well as the position of the business. So see, it becomes more mechanical when you do journal entry, this and that. You know the procedure, right? But when you do it this way, you understand the effect of every transaction on the position. So because you are managers and that is your job. I mean, we are not making you accountants here, right? Otherwise you would have gone for BCom or MCom course, right? So that's why we follow this approach. And then in the coming classes we will also introduce T accounts. So that is why we did not use this in the
Yes,
preparatory
I
classes.
only had this point. Why don't we just directly move to those part? And
But
Sir,
because
if
it
we
becomes more mechanical in that case, because you do not understand why you do what you are doing, right? So and that is what happens, especially, I mean, become students would agree with me, it becomes so mechanical that sometimes you do not really know why you are doing things and what is the implication of everything. So that's why this gives you a different so you take any top B schools, they will always start with this. That's how it is. The reason is this is more helpful for decision making, and we are going to discuss T accounts in the coming classes. We have a case called, I think, thumbs up, where we are going to discuss the accounts for sure. So don't worry. Yes, anyone has any question? Yes, anyone has any question? Please.
Sir, you said that we are using this in way of accounting so that we can understand it better, right? So if I am able to understand it with this way, so I can keep going with this. I do not have to change the way I am doing the accounting information solving problem.
Unless I tell you. So let us go step by step, because in the coming classes we are going to add T accounts. So right. So as of now, you can do it this way, and then it will become so easier for you to understand. You need not prepare the accounting equation. You just put the values in the T accounts and you get the answer. So right now I would say accounting equation is fine, but we are going to change the modality, or the way we solve questions. Of course, we are going to change that. And we are also going to discuss what is called cash flow statement in coming sessions. So again, that would require some extra efforts to solve questions. So we are going to discuss. But good, yes, right now you can go with this, and then I will tell you when to shift from this to another way of doing it. Yes. Guys, thank you so much. I mean, I have received uh, messages and all that. In case I have not replied back, thank you so much once again for that. Oh God. Hello, can you hear me? Hello.
Yes, sir.
yes, sir.
So were you able
Sir,
to hear me
there
before
were,
few seconds?
sir, actually, some of them were joining.
Because there was some connectivity
Yes,
issue.
sir, actually. Yes, sir, there was. And sir, I was saying some students are having problem. They're joining with code. It will take one. Can you hold it till then, sir?
Fine. I think there was a connectivity issue. That's why I was talking for some time, but I did not get any response. But you would not know that I was
Yes, sir.
talking because of connectivity issue.
Yes, sir, your voice stopped in between.
Yes. So that is because of the connectivity issue. That same happened in the first class also. Fine. That happens sometimes. So in the meantime, it's 11:21. So we are going to discuss this. Before I start discussing, and anyway, students are joining. Guys, you are in PG program now. I mean, the kind of mails I have received and the kind of questions I have received, um, I was not happy with it, because now you cannot say you are not from accounting background. We have spent 14 hours on accounting basics during the remedial sessions, and all of us are now almost together, right? So you can't really say that you are coming from non-commerce background, so you may not. We have gone through 14 hours, guys. 14 hours are too many. Trust me, too many, right? And I have also answered a lot of questions. So in life, when you do not know something, you should work hard. That's how it is, right? Even I don't know everything about accounting. So when I don't know something, I read about it. I work hard for it. So please, guys, of course, you need to work hard, but don't get scared because you believe that this is the first time in life. A lot of things are going to happen first time in your life. Trust me. This is just the beginning. In corporations also, even after you have taken the degree from Nirma University, you will have challenges when you make decisions. It's not going to be like the classroom. So please be ready for it. And at the same time, don't say that you do not know this and that. You don't know this, you work hard, you read upon it, you ask me, right? But uh, just because it is difficult, what kind of questions can come, and this and those questions does not sound fair to everyone. So please do not ask. I'm so sorry. And I cannot reply to those questions also over any platform. So please, right? Thank you so much. So shall we start, guys? Hello?
Yes, sir.
Okay, so you can hear me. So anyone, now, so because we are using case studies, that is how it is dealt, that 70 to 80% of the participation has to come from the students when we are solving case studies, right? So please tell me what is happening with this case. Please share the facts of this case and how do we proceed. So you are going to drive this class. I'm just going to record this here. That's it. Yes. What is happening in this case? Anyone, please chip in, because I got a very good participation in the first session. Please.
So the thumbs up case or the chemical light case?
Camelite beta. We discussed I mentioned yesterday Camelite case. I have mentioned that yesterday in the group as well. As you know this. You have the outline also. You know the order of things. Yes. What is happening in Camelite? Please tell me.
So may I?
Yes, please carry on, please.
Sir, so there was a guy, Bennett Alexander, who sort of invented the chemical upon discovery, and then he patented it. So after patenting it, he created the company and then issued the shares, and there were some transactions regarding it, and his business grew. And when the time came for him to present the financial situation, he is not a businessman, but he's like he
An
thinks that
entrepreneur,
the
right?
business
He's
is
an
doing
entrepreneur,
well.
right? Yes.
So
this
we have to basically present the financial situation in a report so that he can present it to the stockholders, conveying that the business is doing good.
So wonderful, Shatakshi. Please, anyone else would like to participate or? Yes, please.
Sir,
Please.
adding to Shatakshi's point, as we gradually go through this case, what we notice that the bank balance has fallen further, one after the other. So we are also, the case is also focusing on why that happened.
Very good. So in fact, this case is taught in the initial session, sometimes first or second or third class of financial accounting course, just to discuss the concepts, also to discuss how accounting information is relevant and what is the importance of accrual system. Very good, Abhinav, very good. So yes, anything else you would like to participate? Everyone, please, everyone chip in, please. Aditi Sharma, Amarjad. I have seen all your faces to some extent now. So please, you could start your camera. Your cameras are working. That is you were scared about on that last week. So now it's done. The damage is done. So you can start your camera. Your cameras are working fine. Yes. Yes, Aditi Sharma. Please carry on. You were saying something?
No, sir, I haven't read the case.
Why, beta? See, do not say that because of the quiz, right? The quiz is not like you are preparing for something like an end-term examination where the entire only 3 sessions are covered. I have specified that. I never say that. Trust me. Till date, I have never said this in the classroom that ये आएगा वो आएगा. इतना specifically I have never said. So please meet me halfway. Yes, Abhinav, do you want to say anything? Shatakshi?
Sir.
Yes,
Sir,
Abhinav.
Sir,
Yes,
Nimesh.
you did. Yes, Nimesh, please.
Sir, also given in the case studies, Susan Peterson, a friend of Alexander, who has invested a substantial amount of money in his business, and he has indicated that there is a auto part distributor available for their Camelite's expected price also. So there is investment incoming also in this business.
So this is how entrepreneurs think. Like all of us have ideas. Shaditri, Abhinav, Nimesh, all of us have ideas. Abhinav, Ayushi Singhvi, Akshat Dara, Kamarzad, all the names. I cannot read all the names, but I'm just saying all of us have ideas. And if I ask you right now, you'll note down 100 ideas. Trust me. I mean, I may not have good ideas because of my age and everything, but I know this generation, because they use computers and this and that, you may be having hundreds of ideas, but not all ideas become business, right? Not all ideas become product, right? The classical example is Google Glass. Do you remember? Have you heard of Google Glass? Have you heard of Google Glass, right? But that did not become the product, right? Wanna get noticed? Sir, can you shift the screen to left a little? Okay, let me see.
Yes, sir. I want to see the other accounts. I am not able to see.
I have put this image janbujke intentionally just so that you can see what kind of product it could come out with. I mean, what kind of product it is. Have you seen the movie Jurassic World? At the end, just
Yes,
to call
sir.
T-Rex, right? That actor, one of the actors, fire in the device some stick and then calls upon the T-Rex, if you remember. So this device, this instrument, this product is something like that, right? So
it's like a
Yes,
right,
sir. So
just like a flare,
that
yes.
chemical is used in the glow lights, glow
Yes. So,
sticks.
so they have patented this because the technology or the chemicals or the combination of chemicals they may have used may differ. I am not a chemical engineer, so I may not be able to express that. But and even the focus is not on that. But still, I'm saying that he got the patent. And in America, I will tell you this thing, that how do you get patent? If something is not patented, you can get the patent for that. That is how American laws work. And you get the patents for 20 years. Means you have the power to use that technology that you have designed, the patent that you got for 20 years. There was a kind of what do I say? So in America, every now and then people receive mails and messages, that you are violating this and that patent, especially the entrepreneurs, right? And the patent may be just clicking the button, like clicking on the URL. And I'm not making this up. Trust me, I'm not making this up. I had seen the documentary where they randomly receive mails, and then they have to go to the court in Texas, and then they, of course, you cannot win the case, so you end up settling it outside the court for maybe 100 million something, right? And if you have heard Tim Cook and Steve Jobs in the past, that why your products are so expensive, one of the things they mentioned is that because we are such a company, and every day we face some lawsuit cases, right? And that lawsuit may be related to pressing a button, and which is so general, which is so simple, but yet because it is patented by someone, because in America, if something is not patented, you can get the patent. We face some lawsuit, and that's why just to settle it outside, we have to incur a lot of money, right? So in this project also, just to bring it to the case, and there is a documentary, I do not remember the documentary name, I'll tell you. And later on, it was found that the judges involved in this and the lawyers were all had a kind of a understanding that these lawyers would send a mail to these random people and through the shell company, and then the judges would be in favor of the lawyers, and then that's how they used to make money. And this is just actual story. Texas is the state, right? Place, right? If you want to know more, I will search upon this. But fine, what is this? What is the relevance to this case? So in this case, this guy has found a patent, and you can see you saw the product just now, right? How it may be. So it is not a unique product, but the way it has been patented may be different, right? And this product has a market, right? The market where the armed force may be using it, the manufacturers of flares and safety equipment may be using this. So this has a market, and because this may have a market, he created this product, and he would like to make a business out of it, right? Now tell me what else happens then. Please participate now.
So may I?
Please.
Sir, towards the starting of 2003, the company had invested in a lot of investments rather that were required to set up the framework for the production of the product.
Setting
So
up the
there was
business.
a lot of
Shatakshi, you're talking about setting up the business, right?
Yes, sir. So there was a lot of outflow of the cash, and they were worried that they're losing the money because there was no proper recording of the transactions. And these things are written over the time because it's going to be used for a lot of years. So it was
We will discuss
decided
this,
that
Shatakshi. How to deal with those transactions and those accounts. We will discuss this in a moment for sure. But so what is happening? There are two accounting periods if you look at this question, this
yes,
case, right? The first period is January 2 to 30th June. This is also pre-operating period. Why it is called pre-operating period? Because the business has not even started operating between this period. Business is setting up, and in reality also it takes time to set up the business. In this case, they have given only 6 months time. And there is a second period that is again 1st January to 31st December. So because we are going to prepare the balance sheet at 31st December, it is going to capture the first 6 months as well as later 6 months. And the business has started operating, if you have read the case, in the later 6 months, right? Because the
yes,
business is that it starts getting earning revenue in the later 6 months. That is, we all agree upon, right? So how the business is set up now? Business is set up with capital. You need capital to start the business. So now we can start discussing the accounting entries. Please participate now. I want Sparsh. We'll start with Sparsh, and you can raise your hand in the this thing. Yes, for this platform. Yes.
Yes,
Yes,
sir.
please. Yes, carry on.
Okay. So, sir, on January 2nd, sir, Alexander or established the company, and the company issued 5 lakh shares, or we can say 500,000 shares. And, sir, from it, because the Alexander registered for the patent, he got 1,25,000 shares in return. And, sir, the rest were issued to the general public for 1 each. So we can say that in the total capital, we got 3 lakh 50 capital.
So you are
And so
saying that the business has started with 5 lakh capital. So let us go with this, what you are saying. 5 lakh, I will add in the capital account. So whenever the company is raising money, it is called share capital. Sparsh, can you tell me what is share?
sir, a bit or a part of the total capital, the capital is divided into small bits, and those bits are called share as per Companies Act 2013.
So in this case, there are 5 lakh shares issued by the company. Each share has a value of $1, right? So in simple words, if someone wants to understand, share is an indivisible part of capital, right? Share is an indivisible part of capital, right? Now, in the last class, I got some wonderful questions related to this. That, sir, whether to keep the share price higher or lower, and how the why different companies have different share price face value, or what I mean face value. Of course, I'm talking about because market values are driven by the market movement, that is demand and supply in the market. Yes. Why the share price is different for different companies, and what is the logic behind that? Because yes, anyone, please. Then I'll ask.
So may I?
Yes, sir. I will. I want to ask Dheeraj, and then I'll come back to you, Sparsh. Yes, Dheeraj.
Okay, sir.
Yes, sir. So
Huh.
difference in the share price or the face value depends upon the company. Like in India, I think they have a upper limit of I think rupees 10 per share as for but it depends on the decision that the company makes. If a well established company may issue a share on a premium to reduce the risk of the investor, because since they have an established operation, the risk of failing is low. Whereas if a new company issues a share which has been recently incorporated, the risk is very high that the company will stop its operations. So
Dheeraj, the second part of what you said was right. The first part was wrong. I don't think companies act prevent companies to keep any share price. Right? They may have they may have that for share discount and other thing, but not for face value. But the second part is absolutely right. That the companies, please everyone mute yourself for now, and then I will come back to you. The companies can select any face value. Now, why do they? Some companies have $1 and some companies have $100. The reason is the kind of yes, Sparsh, please carry on.
So, sir, sir, actually, the total amount of number of shares that we can issue is limited. So, sir, what we do is in the starting we issue for what we call one high price per share. But then what we do is we bifurcate it into smaller amounts so that we can issue more shares to more people.
So you, of course, the part of your answer is absolutely fine. The first part, I mean, it was difficult to understand, but fine. I understood what you meant. The idea is, see, if you look at the Warren Buffett's company, Berkshire Hathaway, and on the other side, you look at Apple now, and Apple maybe 10, 15 years back, Berkshire Hathaway, look at the share price. The share price, the reason is they do not want everyone to invest in the company. But if you look, so initially, because you know how good Apple is, so there was a time where the share price per share, of course, was $700 for Apple. So because they wanted to attract more investors, they wanted more people to invest, they did stock split. So for every one share they give 7 shares. So now suddenly for every share the share price was around $100. You see, the reason is that so that more people can invest in this company, you can reach more investor base. You can, and it's a kind of a marketing also, because when you have more investors, they are talking about your company, and that helps in expansion and growth. So again, this is totally depends on what company wants. Yes, Dimple, please, Dimple.
Sir, can we also say that the stock price also is determined on the basis of what the stature of the company is at the present? So, at what stature the company wishes to view itself, on that basis also they decide the price of the share.
Of course, of course. So we were discussing about the face value. So and then we started discussing the market price, right? So of course, Dimple, see, the market price is driven by demand and supply. So the face value may be $1. The same share could be sold for 100, 200, $500 in the market, right? That is totally fine, because face value depends recorded at book value, or the price at which the shares may have. I mean, you may have decided the value, but because the company has a lot of potential, like company may be Tesla, company may be Apple, company may be some good company, and because it has a lot of potential, the shareholders may be willing to pay more than the face value, maybe quite more than the face value, because company has a lot of potential. And you always, I mean, the good shareholders who are investing in shares would always invest in companies which has a lot of growth potential, right? And I had also talked about this during the remedial sessions, or some time back, that there was a time Infosys, like those who had invested in Infosys in 70s and 80s, they are crorepati now. They had invested 1 lakh rupees or something, they are crorepati now. So yes, that is that. So what I'm saying is that the face value could be anything, and because the market values are somehow linked to the face value, the companies decide what is the face value, right? And when the company feels that the market price is gone too up, the shareholders may not be able to afford to pay in this invest in this company, they may do stock split. They may split up the shares into more shares, so that you can bring down the price, right, to some degree. Fine. So when a company raises money, through equity, it is called share capital, and the share is the indivisible part of the capital that we all agree upon. Fine, wonderful, right? So I'm going to record 5 lakh here. What is the duality? Can someone help me understand?
Sir, we have 50,000.
Sir, one is patents.
So let us focus on the cash. How much cash is received?
350,000.
375,000.
So the duality is not getting completed. The duality has to be, the effect has to be on both the sides, right? Everyone agree upon this. So what is the
It's
second part?
the patents.
So patents worth rupees 1,25,000.
So this is a case of issuing shares other than cash, for other than cash. This is a case of issued shares by the company for other than cash. Means company is not receiving the cash, but company is giving you the shareholding, right? Now, I have because we had a lot of discussion on this point in the last class, and this is a very interesting part as well. Why are you recording 1,25,000, not 130,000, not 1,40,000, 2 lakh maybe, or maybe 1 lakh rupees? Why are you recording 1,25,000? Isn't this arbitrary? Because remember, company is not receiving 1,25,000 from the owner or the Alexander, right? In this case, Alexander. Company is not receiving 1,25,000. So why are we recording 1,25,000? Please let us have a discussion on this.
So the company is receiving the right to do the business on the behalf of Alexander in the form of the patent. Alexander has sold the patent to the company. So in the exchange of the shares.
Patent is valued at 1,25,000? Why not 1,50,000? Why not 1 lakh rupees? That is what I'm saying, beta.
Sir, maybe he wanted to pay some portion of the shares by way of patent, not necessarily that patent is valued at that price. Means he's eligible to pay all the share in cash.
Sparsh, we are not arguing, Abhinav, we are not arguing that he should not get the equity, of course, right? Let's say Aditi, Abhinav, and Satakshi are starting the business. Aditi and Abhinav are bringing cash, and Satakshi is saying that I do not have cash right now, but you can use my room, or you can use my flat, or you can use my some asset for this business. So Abhinav is bringing cash, Aditi is bringing cash, and Satakshi is also bringing something, some asset, and that is the capital, because all of you have given something to the business. So that is, I'm totally, but in this case, in the example I gave, it was a physical assets. So Shatakshi has given the flat, and the market value of this flat may be 25 lakh rupees, maybe 30 lakh rupees, and Abhinav and Aditi have brought 30 lakh, let's say. So the capital is 90 lakh. But how do you decide in case of patent? Because
So
you
can it
haven't
be
paid for it.
valued
Current
in
value?
terms of?
Yes, Shatakshi, please.
So I was.
First,
Sorry.
Prince is talking. Yes, sir.
okay. Let me ask Princey and then Shatakshi. Yes, Princey.
1,25,000 that we have as a goodwill in the market. So we don't we are receiving this amount because of the goodwill.
We are not receiving this amount. We are receiving the patent. Understand? So what happens with
Sir,
Princey? Understand? Just a second.
yeah.
This Alexander has got. Please mute yourself. The Alexander has generated a patent, right? So now when he's giving the patent to the business, you are getting the exclusive rights, as someone had mentioned, to use this patent in this business for selling certain products. So this patent comes to the ownership of the business now from this. So that is why you are paying 1,25,000. We all agree upon this, right? But why 1,25,000? Not more or less. That is what I'm
Sir,
trying to. Yes.
maybe because it is provided by the Alexander, like the rest of the share 3,75,000 are provided by them. It is a kind of capital he is giving into the business.
So
So,
can it also be the current value of the
yes,
patent?
both of you are right. Both of you are right. This
Sir,
may be the
it could
yes,
be.
participate.
Sir,
Yes.
yes, sir. So could it be that Alexander would have to pay something to get the patent, right? There needs to be a transaction between him and the government, which
So
is going to issue the patent.
so let's say
Since he already.
so let's say you have incurred. Generally, when you generate a patent, you do not invest too much money, or you do not incur so much money, right? So I
Yes,
don't think that Alexander would have incurred 1,25,000 to design this and selling this for 1,25,000. Do you all agree upon this or not? Do you really sell something at cost price? No, I don't think so. You always
no,
make
sir.
money.
Yes, sir.
So,
Yes, sir.
and I also agree upon. I mean, I also fight for this, that the money that he might have incurred would be very much less than 1,20,000, very much less than 1,25,000. Maybe not even 25,000. I'm saying I may be pushing it too hard, but I'm just saying, in life you have to understand this thing very clearly, that the value comes from the market. The value comes from some model, some method you use, the approach you use to calculate something. But the price is where the demand and supply matches, where the buyer and the seller agree upon something. Now, let's say Shatakshi is bringing the patent and Abhinav and Aditya are bringing cash. Now, if Abhinav and Aditya does not mind giving 1/4 control to Shatakshi in this business for giving the patent, why should we even talk about this? Right? If Abhinav and Aditi do not agree upon this, that the patent should not be 1.25 lakh rupees, then it's a different case altogether, right? But if two of you agree upon this, you are also, because he's getting 1/4 shares and you are also having, let's say, 1/4 or 1/3 whatever share. Let us not get into mathematics right now, but both of you have agreed upon, because it is a company of multiple members now, not only Alexander. And if Aditi, Abhinav and all the other members are ready to give 1/4 control to this person, this Alexander person, it's okay, it's fine, because that is how companies, right? And in life also that happens. There are people buying iPhone for 1.5 lakh before it has launched to India, right? So
And sir, we will only allow 1,25,000 only when some other person is bringing values to our business, like it is bringing profit to our business. So it is the market. Like if
yes,
there's
yes.
a demand in the market, we will agree to him.
So that is why I said it comes from two facts. The fair market value of this asset could be 125,000 rupees, because all the shareholders, that is including Alexander, believes that the value it brings to the business, the economic benefit in the future it brings to the business is 1,25,000. But 1,25,000 is not could not be the exact amount, right? That is also true. But more than that, what is powerful is that is what the price at which the patent has been priced by all the members, that they are ready to buy the patent. They are buying this patent as a business, all the remaining shareholders, at 1,25,000. So if the buyer and seller agree on this, just like the just a second, beta, just like the iPhone example, if the buyer and seller are agree upon selling and buying the iPhone for 1.5, like who are we to talk about it? Just like the stock market, right? In the stock market, the face value of the share could be 10 rupees, but the same shares are sold for maybe $1,000, or look at MRF, right? 10,000 maybe, 20,000 maybe, right? When the buyer and seller agree upon this, why do we care? Why are we even discussing, right? So yes, now please, someone was saying something. Yes.
Yes. Can we say that the value of patent is dependent upon the agreement between among the partners?
Yes.
And that can be one factor, and the second factor can be the fair market value of the asset, whatever.
Wonderful. But because this is a patent, this is a unique patent, and patents are always unique, right? So there is no reference point to say that the value is 1,25,000. Are you getting what I'm saying? How do you know that how do you know that the Android phone with this latest OS with this hardware should cost around 10,000? Because you have a reference point. You have a reference point that the similar phones are, but this is a patent. Understand, the patents are unique. So it is priced. It is not valued. It is priced. Are you getting what I'm saying? It is priced at 1,25,000. Then you can say valuation. Because in finance generally, a lot of people get confused between price and valuation, and sometimes we use that interchangeably. But price is something agreed upon by buyers and sellers, and value is something which is based on some model. Now, Abhinav, may have a different model. Aditi may have a different model. Abhinav, other Abhinav in the class, if there is, may have a different model. Ritika Atal may have a different model. All of them may have a different model. So the value may come different, but so value is derived, as someone has mentioned. Thank you so much, Dimple. Value is derived where the price is agreed upon by the buyer and seller. It is bargained, right? It is bargained, and that's how it appears. And in life, price is more important than valuation, because we buy shares not because we think that the value is this. We buy because the price is this today. Right? So valuation is a perception, and price is real. I hope all of you understood this, right? Yes. So by 1,25,000, because all of them have agreed upon. So the simple answer is that 1,25,000 is the patent purchased by the business, and for that, all of them are so happy with this person that they are giving him shares of 1,25,000. He gets 1/4 control, right? Oh, we spent a lot of time on this, but I hope we understood something important, right? Yes. So now we are going to discuss each of this one by one. Yes. So now, in fact, that is the purpose of, and in fact, the commerce students would also agree that this case, if they have read, all of you have read, understand this is not just solving question. This is more than that. This is discussing the accounting policy. What is fit for this company? What is fit for my company in case I become an entrepreneur, right? So yes, let us start recording the transaction. Because the remaining part of the case is very straightforward. Let us look at the January 15 transaction, first transaction. Yes, legal fees. Anyone now, you have to participate. I want more from your side. Dheeraj has raised hand. Satakshi has raised hand. Bina is raised. Bina wants to participate. I want someone else to participate, and then I will come back to you. Ritika Atal, please. Or maybe Brishank and then Ritika Atal. Brishank, please. Brishank.
Yes, sir. Am I audible?
Yes, you are audible. Yes.
Okay. So 7,500 has been paid as legal fees. So we'll deduct 7,500 from cash column and we'll add it in legal fees.
But is this an expense or asset? I know you can see the column for that, but I have, because I do that sometimes, I write something wrong so that I can fool people. I can fool people to believe that, it is an asset, not an expense, just so that you saw the column. I may be lying with you right now. Why are we not reducing the retained earnings, assuming or saying that this is an expense, not asset? So let us discuss this. Legal fees is expense or asset in this case? Yes.
It's an expense, not an asset.
Who is saying this? Prishant. Good participation. Now I will ask someone else. You can mute yourself. Thank you, Prishant, beta. I will ask, I think Nisarg maybe, Nisarg and then Akshat Darak. Nisarg,
Yes, sir.
please. Yes,
Yes.
Nishan. Expense or asset beta?
Expense, sir.
It is
Sir,
an expense.
may
Or,
I?
Sir, expense.
just a second, I will ask everyone in fact. Akshat,
Sir, it's an expense.
it is an expense. Very good. Aditi,
According to me, it is an asset because it is related to the incorporation of the company.
so you are from accounting background. We will also discuss that. Good. Anyone else would like to participate?
They will
Shatakshi maybe now.
capitalize it.
Shatakshi also, then Sparsh. Shatakshi and Sparsh.
So, since the cost and the expenses for the incorporation of the company, it will be considered as it will be capitalized because it's towards the incorporation and not the normal expenses have not started of the company since the business is not running yet.
So I think part of what you said is answering the question. Wonderful. Sparsh, last participation, and then if I find new names, I will ask them, or I will just move. Okay. Please, Sparsh, and then maybe Dheeraj. Sparsh and Dheeraj, last two, please. I can hear you.
audible, sir?
Yes, I can hear you,
Okay.
beta.
Expense.
Okay, you are saying expense. Yes, good, good.
Okay, sir. I was trying
Sparsh,
to
I
think about
understood. Sparsh, there is a network issue. Sparsh, I understood. We will discuss this. Last, Dheeraj Agrawal, please. Dheeraj.
Sir, there is I think, specific account like incorporation expenses that every company incurs. So they can show it as an expense or they can also show it as an asset and or amortize them. But it would be preferable to show them as an expense. It depends on the accounting practices of the company.
As per the latest, can it be asset as expense happens for operational activities? I think Ritika has answered the question. Do not forget that this year has two periods. And the January 2 to June 30th is the pre-operating period. Business has not even started operating, beta, understand? I know I say this beta so often, you are making fun also, but fine.
No, sir, we
No,
like it.
I'm just...
Sir, it sounds good.
Sir, we love it, sir.
But I just remember that's why I will also share a story when
Sir,
you
it
come to the
feels like
campus
family.
why it has become a habit to me. I will also share the reason, but when you come to the campus, not on this platform, virtual platform. Okay, fine. Legal fees is expense or asset, and understand the reason. The business has not even started operating. What is the matching concept says? Matching concept says that match the revenue with the expenses incurred to earn revenue. Business has not even started operating, beta. Business has not even started operating, started doing the business activities. It is like this, that I want to start the coffee shop, but before I start the coffee shop or I let the customer into my business, I need to arrange tables, I need to have furniture, fixtures and everything, all the equipments I require ready, right? I may have to incur money on legal fees, registering the business and all that, right? So right now, we will discuss this again because there is an event later on coming right now, because it is a pre-operating activity before the business starts operating. I'm, rather than showing this as an expense, I will show that this as a capital expenditure. I will capitalize it right now for this first 6 months. I'm saying we will discuss this. We'll come back to this because we are going to have a lot of discussion on this, right? So everyone agree upon this. Why it is? Oh, I'm typing in chat box. I don't know why. 7,500. Yeah. Right, so legal fees is 7,500 and cash is gone down by 7,500. Right now legal fees is a column like an asset. You can call it capital expenditure. I am capitalizing it for the first 6 months because it is pre-operating period. Business has not started operating. So if business has not started operating, I cannot match the expenses with the revenue because there is no revenue, right? Yes, all of you agree. Please move your head or you show your hand sign or something. Yes, the next transaction is purchase of material machinery, please. Akshat Darak, yes. Very simple, Akshat, please. Jaldi se, fast, fast.
Sir, cash goes down by 62,500.
Okay.
Machineries will increase by 62,000.
Very simple. And it is an asset. There is no argument on this because it is going to, machinery is not going to be sold or not going to be used up within 1 year time. It is going to be used for 10 years in this case, if you have read the case. Right? Cash goes down and a machinery goes up 62,500. Good. Great. Next transaction, please.
Try this.
You can. Anyone can try, please.
Sir, I'll
So
try.
may I?
The
So
cash
may I?
will go down.
Who said may I? Nimesh?
Yes, sir.
Nimesh, go ahead, please. Everyone should get a
Sir,
chance today. Yes.
sir, the 75,000 worth of plastic and chemicals. So, sir, the cash will go down and the material will go up in the asset section.
So material is a asset, right? You agree upon
Yes,
this?
sir. Yes, sir.
Current asset or non-current asset?
Sir, current asset.
Because it is going to be consumed to
Yes, sir.
produce
It's going
goods.
to be consumed. Yes,
It
sir.
is going to be used in the product and the goods would be sold. So it is a current asset. Wonderful. So this is where we stand after the first 6 months. Right? And this answers the question because that person is not an accounting guy, not a business person. She is like from 375,000. Why it is 230,000? Because the money has been used to purchase assets. So as you can see, the capital of the business is 5 lakh rupees, out of which 1/4 is with Alexander, 3/4 is with the remaining relatives and friends, those who have invested in this company. And this 5 lakh is made up of 2 lakh 30,000 cash, 1 lakh 25,000 patents, 7,500 legal fees, 62,500 machinery, and 75,000 material. So all these are invested into all these assets. 5 lakh is invested into all these assets. So without wasting time, let us go to the transactions on the next page, because these paragraphs are talking about why 375 is 230. That is the reason. The 1,45,000 has gone into different assets. So cash has been transformed into other assets, maybe current assets, maybe long-term assets, right? That is what it is saying. And the business is doing great. That is also said in the coming paragraph. We do not have time to read the entire paragraph. So anyways, you may have read. So it's fine. This paragraph starting from during the last half of 2003 Camelite Inc. Yes. Someone read and then answer the first transaction, please.
May I?
Who is this?
Pratish.
Please, Pratish. Yes, Pratish.
So in the early June 2003, the engineer delivered the prototypes of the Camelite that he had been developing, and he was paid a total of $23,750. So
Okay.
the prototype will increase with $23,750, and it will get impact on cash by decreasing by the same amount.
So I will decrease the prototype.
Increase the prototype, we could decrease the cash.
Decrease the cash, sorry, and increase the prototype. Prototype. So you say prototype is an asset or expense?
It's an asset.
So right now we agree upon asset. So I am not discussing prototype right now because there is an event on prototype later. We are going to discuss this, right? So we'll discuss this again, and we are going to apply intangible assets accounting standard 38, right? Accounting standard 38. Can't it be? Okay, this is a. Can it be asset as expense happens for operational? Okay, that is the wrong the earlier chat. Fine. So now next transaction, please. We are going to discuss this. There is, you can see if I zoom in, you can see that there is a space for this. So we are going to discuss this. Don't worry, right? Right now I'm recording this as an asset, right? It is an asset because it is, why it is an asset. Let me say that, otherwise someone may get confused. When you are developing the prototype, it may be giving you, teaching you something. Do you remember the example of Thomas Alva Edison? He must have tried maybe 1,000 times before you got the bulb, right? But can you really say those 999 times he was a failure or that did not add value? No, because of those 999 times he understood that what should not be done to make this bulb, right? So you cannot ignore the prototype. Prototype helps you in devising the processing part of this manufacturing this product. So it is important. So we are going to, because it has economic benefit. The economic benefit we'll discuss later. Yes, sales. Next transaction, please. Aditi is there. Sparsh, Komal. Komal, may I ask you, beta? And others can raise hands. Yes, yes. Komal, please.
During the 6 months from July to December 2003, Camelite sold 754,500 of its product, the largest singular purchaser, the auto parts distributor with whom Peterson had negotiated, still owned Camelite Incorporation 69,500. All other customers' accounts were paid in full by year end.
So yes, what is that? How do we record it here, beta? Tell me.
So 754,500 products it sold. So cash will be deducted.
Okay. So let Komal, let's say you are selling the iPhone to me, beta. I mean, if I will get really lucky if you sell the iPhone and give me cash also, Komal, right? So when you sell goods, you generally receive cash, or something else, right?
Yes, sir. Sorry, sir.
Yes.
Yes.
But tell me how so it is a sales. So sales increases revenue, increases retained earnings. We know that, right? So I will record 754 500 in the retained earnings column. Accrual concept, matching concept, revenue recognition concept. You recognize the revenue when it is earned and received or realizable, realized or realizable. So there is a certainty that you are going to receive this. So 754 500 is the. So please mute yourself because some background noise is coming. Yes, Komal, if you could mute yourself, Komal, please. Thank you, Komal. So 754 500 is the revenue, and revenue increases retained earnings. So I'm recording 754 500. Now tell me, where do I record the remaining the second half of this entry? Yes.
So may I?
Yes, please. Yes.
It will be recorded in debtors, account receivables.
Okay. Yes.
Because that, and sir, the balance amount 6,85,000, 8,500 will be 85,000 will be recorded in cash.
So guys, during the year, during this not year, this 6 months, later 6 months, you have sold Camelite product for $754,500. So it is a great business, right? So you have sold goods for rupees $754,500, and for that you have not received 69,500. So the remaining amount must have been received. So the duality got completed, right? 69,500 is the amount due from the customers. That is also an asset. 685,000 is received from the customers. So that is an asset. Cash is received, and 754,500 is the income. Income increases the retained earnings and equity. We know this.
So
No one has yes. Ask me. Yes.
I have queries. I don't get the second part.
Second part is
In the first part, 754,500 is the sales we get, but what about the second part? I don't get it.
Read the. Can you read the paragraph one more time,
Yes,
beta?
sir. Yes. The largest single purchaser, the auto parts distributor with whom Patterson had negotiated, still owned Camelite Incorporation, $69,500. All other
So please complete this line also. That is also very
all
important.
other customers' accounts were paid in full by year end.
So can I say out of 754,500, 69,500 have not paid the amount? Can I say that, Aditi?
Yes, sir.
Yes?
Because they owned Camelite.
So they owe Camelite. So they, for them it is a liability. For us it is an asset. For us, I mean Camelite Incorporation. So because we are going to receive this in the future, so this 69,500 is an asset. The asset called debtors. I am going to show this as an asset, debtors asset. So that is not received. So out of 754,500, 69,500 not received. So remaining must have been received, right? That is what the statement said. The other amount is received.
So the remaining amount we will increase the cash.
Yes, accounts receivable. So, Dimple, your question is, what do you mean by account receivable? You are asking how it came. If you could, beta.
No, so I was just actually, when you asked the question that where would 69,500 be recorded, so I mentioned this is the answer.
Okay, great. So it is debtors, we know that, and it is also called. It has been known by a lot of names. Accounts receivable, trade receivables, this and that. I have put account receivable. You can also say debtors. That is totally fine, right? Yes. Next transaction, please. Someone, Ritika Atal, please go on.
Yes, sir. Additional chemicals and plastics were purchased for a total of $175,000. All of these purchases were made for in cash. So cash will reduce by $175,000, and material will increase by $1 lakh.
So I should increase the material because material is also an asset. It is a current asset we discussed, right? So how much, beta, please?
1,75,000.
And remaining, so when you buy a material, what happens? You are spending cash. So cash goes down. So very straightforward transaction. Let us not discuss this. Advertisement expense is a good transaction. Please let us discuss. Let me ask Akshat. Yes, Akshat.
Sir, advertisement transaction, the 22,500 will reduce in cash and it will be shown as an expenses.
So you are saying, so let us reduce the cash first. How much cash should be reduced?
22,500.
22,500. Okay. So you are saying it is an expense or asset, beta?
Expense.
You are saying expense. Okay. All of you agree that advertisement expense is an expense?
Yes, sir.
Why it is not an asset? Because the benefit may be exceeding 1 year, right? I mean,
So it's deferred asset.
It is an investment.
sorry? Sorry?
It is an investment.
It has already been spent, not it's about yet to be spent. It's mentioned that it has been spent, so hence it's expense.
Okay, okay. Anyone else,
It
please?
will give the benefit of to our product for a number of years because advertisements run for more than a year usually, and the expenses distributed towards those years. Also, it's launching the product, so it is an asset.
So let me argue with what you said just now. Let's say I want to I have come up with a shampoo brand, and let's say for marketing, I'm supplying the small sachets you get with the newspaper, right? So
Yes,
can I
sir.
say the money I'm spending, people will buy my shampoo for 3-5 years because I'm supplying it today for free?
No, sir, but sir, you
No,
have
sir.
to invest something in order to provide some sort of awareness among the people, right?
But
So
but
in that,
I do not I'm not saying, Shatakshi, that I'm not getting financial or economic benefit in the future. But we are discussing that for how many years you will benefit this. Is the case suggest give any information that for 3 years you can sell this product because of this marketing
no,
campaign?
sir, additional information is not there.
So that means it has to be an
Sir,
expense.
if the expenditure is very huge and large on the advertisement, only then company write off it into many years. Else, if
So
there
let's say I'm setting up a pani puri stall. I know I am always coming up with pani puri stall because that's the most profitable business in Gujarat generally. Not during the COVID time, but it is the most, because you see the stall almost in every corner of single. I mean, and then all of them make money, right? What I'm trying to say is that let's say I'm spending 10,000 for one. My investment in this pani puri stall is, let's say, 50,000 rupees, and I'm spending 5,000 on advertising about my pani puri stall. Whether this is a large amount or small amount, tell me. Isn't this subjective to say that the amount is large? That is my focus. So again,
owner will decide.
so ad is a deferred revenue expense. Very well said. So why? Because the question does not mention anything about for how many years you may be benefiting from this. That is one thing. It is a deferred revenue expenditure. I agree with this. But you defer the revenue expenses only when you know for how many years you can defer it, beta. In this
Yes,
case,
sir.
how?
Or then
Yes,
in case of
Sparsh, you are
prototype
muted. Sparsh,
also
you are
we can
muted.
say the same
You
thing.
are talking, Sparsh, you are talking with us or with your family?
Sir, I was talking exactly. Sir, you are right. It is distributed when we have some fixed amount or a fixed number of years.
So in this
I
case,
was
beta,
getting
all
your
of you are
point.
not wrong, but this is a decision that the business has to make. Every business has to make.
Sir, I have one question.
Please ask me.
Sir, in this case of then we can also say that in this case of prototype, it is also not an asset and it can be an expense because
For prototype, we have time allotted, right? Later. So we will discuss. We are going to have a good discussion for prototype. Don't worry, beta. And I'm also going to use this as a base to discuss this. Trust me, right? Thank you. Very good, beta. Very good, Ritika. So because we do not know for how many periods you can benefit from this, and also that when you are a profit-making business, it does not sound fair to show the profit on one side of the balance sheet and expenses on the other side of the balance sheet. If you are showing legal expenses, I'm going to come back to this. And if you are showing when you are not operating and you are showing expenditure as an asset, that is fine. But when you start making money, when you start generating profit, it does not sound fair towards the stakeholders of the business to show profit on one side of the balance sheet, that is return earning, and losses and expenditure on the other side. So the accounting standard has been modified so many times. And it says very clearly, when the company makes businesses, the fictitious asset should not be shown, should be written off. So in this case, The first argument is that this advertisement expense, we do not know the benefit. We do not know what is the benefit, and we also do not know for how many years we can benefit. We do not know how to measure benefit for every year, right? So I'm going to expense it, and I'm going to reduce the equity, because expenses reduce the equity. I hope all of you agree upon this, and we are going to discuss this so much when we discuss prototype. Yes, yes. Please show your face or something.
Sir.
Yes, 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 yes.
Sir, so had the question been included that it would benefit for 2 or 3 years and it would be asset?
If I say that Hrithik Roshan is going to be a brand ambassador and we are paying 5 crore upfront for 5 years, then you know what is to be done. Because you know Hrithik Roshan is going to come on the TV screen for 5 years, and you know the benefit of Hrithik Roshan selling your brand, talking about your brand. Maybe right now, I do not know right now, but I have seen him performing for our Nirma brand, right? So you know 5 years, 3 years, 4 years, 6 years, right? In that case, you know, because you are paying him for certain years. In that case, it is very certain that the benefit is for 6 years, because him on the TV screen is going to generate sales. Right. But in this case, we do not know that, right? We do not know. Yes, that's why. Yes. Okay. Good. Good. Yes.
So if there is a movie release, and before that only the public has applied for the pre-booking, and then that time only the company or movie brand movie release the advertisement, and that is so in that case it will be an asset for them.
You're talking about the advertisement about the movie or advertisement about your products on the TV screen or on the large
So movie
screen?
advertisement on YouTube and various OTT platforms.
So tell me, for how many years you can remember that you saw the ad on in the PVR for certain brand? Tell me.
So for example.
No, I'm asking you, beta. I'm asking you for how many years you remember, beta.
So it's just 1 month or 2 months.
Not so. In that case, and remember that there is a second argument to this, is that this is routine business activity. Business spend money on advertisement every year, so there is no point in capitalizing it, right? Make sense, beta? Yes. Who was that? I could not catch your name, beta. Sorry.
So Komal.
Komal, understood, beta? Sure, beta?
Yes, sir.
Because you do not know, because in this case you are certain that the benefit would not exceed this accounting period, right? There is a second argument to this. In fact, I thought something else. That's why I was asking. So it's an expense, right? I know, Deepak, I'm dragging this too much, but yes, it is an expense. But because people are asking me, I have to answer them. I was talking about, let's say, I'm not a fan of a lot of Bollywood movies, but still, for the sake of simplicity, let's say the Bollywood movie is coming. Some great Bollywood movies coming, right? And there is an advertisement for that Bollywood movie. So let's say we are following the calendar year, right? And the advertisement started from, let's say, December, and they are following the calendar year, and the movie is released in February. Tell me, in which calendar year for that company the advertisement expenditure should be expensed, in the December month or maybe in the next calendar year? Tell me.
December month.
Say December
month.
But remember, the movie is going to be released in the next accounting period, that is next calendar year. Revenue versus expenses, right? Very interesting question, right?
Sir, but we incur we record expenses at the time it is incurred, right?
So the reason, but I'm not saying you have not incurred. I'm not denying that, but the question is, it is an expenditure or expense? Because in expenditure you spend today and you receive the benefit for certain years. So in this case,
December we can show it in unearned revenue.
Okay, no, it is an expense. So it is not about revenue, but it is an expense you are incurring. Yes. So it may be a prepaid expense, you can call it, but not unearned revenue is used for something else. Yes. Yes. It is used for revenue. Yes. So the answer to this question is that if company does this every year, then it is an expense in the month for the period ending on December, because they are not only releasing one movie. It is a distribution house. So that is where you remember the example of Harry Potter during that. That is the accounting policy they use. It is their choice of how do they want to treat this. That the judgment they have to make. You remember Harry Potter movie's example? I know. Okay, you don't remember remedial classes? the movie had incurred losses. What is that name of the movie? Harry Potter, Order of Phoenix, I think. It was a blockbuster globally. The same example is there in your textbook, but it had incurred losses because of the accounting practices that Hollywood uses. Similarly, that is they have the right to select the policy, right? So if they incur on every movie every year, then it is an expense. But if the project is for only one movie, then they can decide based on this, right? They can treat asset right now, and then they can match it in the next calendar year when the revenue is generated. So again, that judgment they have to make. Yes, I hope that that was a good example. Next, please. How much time we have? You guys have class after this? No. So can I take 5 minutes or something? 5-10 minutes more?
Yes, sir.
Thank you,
Yes,
sir.
sir.
We don't have classes, but some clubs and committees are coming for their introduction round.
Okay, fine. So we'll end on time. Sure, sure. I know every time I'm requesting, or this is not fair from my. I know. Sure, sure, sure. Manufacturing expenses next, please.
Sir, may I?
Yes, yes. Anyone, please.
So manufacturing expenses will increase, and then the salary expense increase, cash will decrease.
Cash, how much?
Sir, for manufacturing expenses or the overall transaction?
Manufacturing expenses.
3,50,000, sir.
And so cash will go down, expenses will go up. Where do I show the second effect?
So for one effect is by way of
Cash is reduced.
Yes, sir.
Second effect?
Second effect.
You said the expenses are going up. Expenses are recorded.
When retained earnings down.
Retained earnings go down, right? Retained earnings go down. Expenses go up, retained earnings go down. Very good.
Yes, sir.
10
Sir, it's 3,50,000.
Yes. Next, please. So manufacturing expense is a product cost. Manufacturing expense is a product cost. The cost you have incurred to produce goods is a product cost. It becomes the part of the product, right? So all this expenditure on labors and all that you have incurred, that becomes the part of the product. You cannot have an iPhone without the workers are working on this. So what is the wages you have paid so that they can so that they have manufactured this iPhone is the product cost. So we are following the matching concept. Next is please salary expenses.
Again, me?
Anyone.
Sir, may I?
Princy, Satakshi, Ritika Atal, they have raised hands. Let me ask Aditi Sharma. Yes.
Yes, sir.
Aditi.
In early July, a further $150,000 was spent on machinery. तो additional machinery में cash less हो जाएगा?
No, we were talking about the salaries, and then you can.
Salaries, okay. Salary expenses में cash less होगा 80,000.
Okay, how much? 80,000.
Yes, sir.
And then.
वही I guess retained earning में से 80,000 less होगा.
Wonderful. This is a period cost. So whether I take either 100 students have taken the admission or 500 students have taken the admission in a coaching institution, the salary of the faculty is fixed. So it is a period cost, irrespective of how many goods have been sold. Yes. Okay. Next, machinery. Last, I think. Let me ask. A lot of students have raised hand. I don't know whether they had raised hand right now or earlier. Maybe Brishang. Brishang, please. Are you there?
Yes, sir, I am here.
Yes.
My connection.
Fine. I understand.
I'm having some problem with my network.
Okay, fine. Let me ask someone else. Who is this? Vikas Dugar?
Sir, Nimesh.
Let me ask Vikas and then Nimesh maybe. Vikas, please.
Hello. Yes, sir. For the 1,50,000 target, sir, in the 1,50,000, cash will decrease and the machine, the sector will increase because machine is a asset for our country.
Wonderful. So it is an asset. So cash goes down. Machine is an asset. Asset goes up. Very straightforward. Wonderful. How much time we have? It's 12:20. So we are going to discuss. I am a bit slow in this class. So we are going to discuss borrowings next time. Legal fees next time. Please remind me if I do not remember. And you can take the snap also in case you want, so that you also remember what we have discussed. Please take the snap.
So you can extend your class for 10 to 15 minutes.
But sir, some students have that activity.
Yes, sir. We have at clubs meetings.
So
sir.
I cannot do that, beta. Whenever you have time, I will cover this next time. Maybe next time I will make sure that both the classes are and more or less most of the time the classes are going together. Fine. I will definitely, in case we require extra time and everyone is available, I'll take extra time. Nothing to worry. Borrowed,
Sure.
please. Borrowings. We will discuss next time. Short-term borrowings, prepaid. All this we will discuss next time. So please take the snap of this. Huh? Fine. Shall we end the session, guys?
Yes, sir.
I hope you enjoyed the case. It was a nice case, right? It's a different, even for commerce students, right? It is a nice case.
Yes, sir. We enjoyed it.
Yes,
Right?
sir.
Same
Yes,
case
sir.
is used in almost top B schools, right? In fact, I worked in IIM Ahmedabad as an academic associate for certain years, and I have seen this case almost every year. And every year students enjoy learning this case. So please, also, I am requesting you to come prepared before you, so that you enjoy more. You understand different perspectives of recording the same transaction, right? Thank you so much. Have a great day. Bye. Thank you.
Thank you, sir.
Thank you,
Thank you,
sir.
sir.
Thank you so much.
Thank you, sir.
Thank you, sir.
Best of luck for the quiz today. Best of luck for the quiz today. Yes.
Yes, sir.